Hi guys, welcome back to the channel. It's me, your boy, Uncle Kevin. Today we'll be talking tech. Welcome back to Talking Tech Thursdays. Starting off today, man, we'll be touching on stories that have been in the news. Netflix. Netflix has been making all the headlines for not the right reasons at all. Um, Recently they released Dave Chappelle's show in which he was making jokes apparently about the transgender community that people did not feel right with. I remember last year in 2021, they made a lot of headlines with this that Netflix employees were we wanted to go on strike if Dave Chappelle's show was put out. And I feel like it was put on hold because of that. And then Netflix finally decided to release it. And out of that backlash, Netflix told its employees to accept artistic freedom or to go home. One of the arguments that they made was if people can stomach watching horror movies, if people can stomach watching, shows with serial killers, they can also stomach watching comedians making fun of certain groups of people in the world. Um, the part that for me, when I think of this issue with Netflix, is companies like Netflix, YouTube, there are platforms in which artists bring their work to be distributed to the world. What they offer is a platform, that people can consume content and people have a choice. And we've been living in a weird time in which people want to control what other people do. And that is weird if you ask me, because you have a choice to watch a Dave Chappelle show or not. You have a choice to do whatever you want to do with your own time, you know. So whether you allow Netflix to put on a show, I do understand that there's an issue of corporate social responsibility that comes with running businesses, but we have to understand that businesses are in the business of making money, not of making friends. And with the time that we've lived in the past decade, a lot of people have forgotten that. And to whereby we stop looking at corporate social responsibility as businesses trying to be more responsible, and people are now trying to take advantage of that to where it starts to impact businesses bottom line. Netflix already paid Dave Chappelle for the show, so for you to say to them, oh, don't put it out, make that be a bad investment because it makes my community uncomfortable, that then becomes hypocritical, because the sense is this business is never started because of you. You joined the business because you wanted to advance your career, you wanted to make some money, but all of a sudden, that same company doesn't fulfill your views and you want that company to change. If you ask me, you have to leave because the business is not doing what you want it to do, right? Go find another business that does what you want. So, anyway, in the latest installment in the Netflix Dave Chappelle drama, the streaming giant made a move. Netflix has issued a company wide memo telling employees that if they need to quit if the content of the streaming service offended them. If you find it hard to support our content breadth, Netflix may not be the best place for you, reads the internal memo. After comedian Dave Chappelle's special, The Closer, released on Netflix, the transgender community expressed their outrage at the jokes made about the community. They felt that the jokes were offensive and hurtful, and they demanded that Netflix cancel Dave's special from the streaming platform. Netflix has since released a statement saying that they will not be canceling Dave's special, despite some people feeling offended. The streaming service recently had their first global fan event tender. While some say that Dave Chappelle has a right of free speech, others argue that he crossed the line and should be held accountable for his actions. Netflix's response was simple: we believe in creative freedom and we want to support artists who push boundaries. The culture war has intensified between the two main sides of ideological spectrum in America. Comedians who are naturally seen as liberal have quickly become at odds with liberal groups. The transgender community taking offense to Dave Chappelle's jokes or transphobia, depending on what side of the spectrum you are on, this issue is a good microcosm of the larger problem. Comedians beg Chappelle and Robes All members of the LGBTQ plus community mostly stood in favor of the trans community, with a growing demand for companies to be more politically woke. As some call it, mega corporations like Netflix and Disney have been more active in social, political, geopolitical issues. Netflix removed its showings in Russia after a horrible invasion of Iraq. This was met by widespread praise. But now the company is reaping the consequences despite gaining 500,000 subscribers worldwide. They lost 700,000 subscribers from Russia alone. This equated to a net loss of 200,000 subscribers. Man, 700,000 subscribers. Because of this, the company is facing possible also from shareholders. They also had to put some shows on hold and cancel others. Netflix is also seeking a way to stop the sharing of accounts in a bid to make people pay more. Due to this, shows that are massively successful, as Dave Chappelle's The Closer, has more value than ever. This might be the reason why Netflix has decided to side with the comedian over their employees. Like I was saying, listen, they're in the business of making money. The moment you start trying to play woke, business doesn't follow that. You know what I mean? When they left Russia, that was a business decision. You see, focused on wokeness. Business doesn't follow that. Money has no emotions. You know, you have to respect the laws of business. In addition to the comments about artistic expression, there's also talk about spending money as well. Netflix additionally asked its employees to be more careful with how they spend company money. The guideline is contained in a document titled Netflix Culture Seeking Excellence, which was originally published by Variety. It encourages employees to use our members' money carefully under the judgment section. The new direction calls for employees to act fiscally responsible. This shift is also responsible to Netflix subscriber base falling for the first time in over a decade. And this boils down to the law of business. Businesses have a fiduciary duty. So it's all about making your shareholders money. It doesn't matter how woke you are. It doesn't matter on which side you stand. You gotta make the business money. The moment you stop doing that, we have a problem. I don't own any Netflix shares though. The business attributed revenue growth just because to many things. One of them was password sharing among its members and increased competition in the streaming industry. Netflix estimates that in addition to its almost 222 million paying subscribers, an additional 100 million households use the service. This includes 30 million in the United States and Canada. The Netflix Culture Memo basic ideas and standards haven't changed. This involves allowing employees to decide, requesting open feedback, and firing employees who aren't up to dream team standards. What do you think about Netflix? Do you agree with it? Let's hear in the comments. Listen, so the thing that happens and the thing that I understood from this article is everything that I try to explain, that you cannot be woke and make money. Those are two different things. Once business start getting involved in politics, in social issues, it takes them away from why they exist in the first place, and that is to make money. So when you make a business move based on a social issue, you end up in a situation whereby, let's say Netflix, they say they have 222 million subscribers. Of that percentage, what is the LGBTQ community? What is the trans community? And how many people are on the other side? And who does Netflix want to appeal to more? If they want to make more money, if they keep losing subscribers, there is no business. There is no work. There is nothing. So when you're a platform like Netflix, you really have to think to yourself, what's the bottom line and how do we manage that? What they did in Russia, it backfired because they lost 700,000 subscribers. That's a lot, fam. And that's a lot. That's a big number. But you do get the praise of the people, but we're not in an industry of praise. We're in an industry of results. And shareholders would really like to see results. Moving on, another headline in the news department for technology is Elon Musk says his deal to buy Twitter is on hold. Now, this story is actually quite interesting. Elon Musk said he's putting his bid to acquire Twitter on hold weeks after agreeing to take the company private in a $44 billion deal. Twitter deal temporarily on hold pending details supporting calculation that spam fake accounts do not indeed represent less than 5% of users. The news initially sent Twitter shares down more than 20% in pre-market trading before the stock rebounded somewhat. 2 hours after his tweet, Musk posted that he is still committed to the acquisition. In his tweet about putting the deal on hold, Musk linked to a 2May Reuters report about Twitter's most recent disclosure about its spam and fake accounts. So we touched on this in the other video that we did. The problem with having 5% of over, I don't know how many users are on Twitter, but if you're assuming they have almost 200 million users, and then you say 5% of that is spam, 5% of 200 million is almost 20 million people, 20 million accounts, fam. And that's a lot. Musk turned this Twitter circus show into Friday the 13th horror show, wrote tech analyst Dan, as a word securities and not to clients early Friday. Musk would owe Twitter $1 billion breakup fee if he were to cancel the deal. Man, imagine that. Like just being given $1 billion because you cannot fulfill what you promised. The street will view this deal as one, likely falling apart. Two, Musk negotiating for lower deal price. Three, Musk simply walking away from the deal with the $1 billion breakup fee. Many will view this as Musk using these Twitter filing spam accounts as a way to get out of this deal in a vastly changing market. So part of the challenges that came with Elon's desire to buy Twitter was, A, they overvalued it to make it a very lucrative offer for the shareholders. But the way the world has been operating for the past few weeks, it's moving real quick, and with the slump in global markets, it's become an expense for them. Even as Musk has worked to secure financing for the takeover, skepticism about whether the deal would go through has been swelling since Twitter's board agreed to the offer on April 26. Musk said he would buy Twitter for $54.20 a share, but Twitter stock never approached that price, hovering below $50 for weeks. This was a sign investors were skeptical that Musk would ultimately make good on his offer. Wall Street's analysts weren't convinced of Musk's ability to buy Twitter either, at least not at $54.20 a share. The consensus target price was below $52, and the vast majority put a hold rating on the company's stock. Part of the problem has been Twitter's connection to Tesla's fate. Musk, Tesla CEO, was planning to borrow against part of his Tesla stake to finance the deal, but Tesla stock has been sinking fast alongside most other stocks this year. It's fascinating how the world works. We just living every day, day to day, not paying attention to what's going on. And all of a sudden, it's like, yo, this is big news, fam. Musk's sale of a significant number of Tesla shares to help finance his Twitter deal had also put pressure on the car maker's stock. Having already committed a big chunk of his Tesla shares elsewhere, he wasn't left with much of a cushion should he need to pony up more funds to complete the Twitter takeover. I think there are many ways he can come up with money. These news writers, man, they always have an agenda. This guy is a billionaire. He can get in touch with other billionaires and just get this done. Musk had offered a few details about his plans for the social media company, though he's often spoken about bot accounts that prompted spam content. He always says the company has been too quick to remove accounts that violate its content moderation. On Tuesday, Musk made headlines by saying he would allow former President Trump to return to Twitter once the takeover was complete. Anyway, the gist of it is the deal is on hold. These things happen, especially with such big amounts being thrown around. And for someone to buy a $44 billion business, you'd think that it's simple, but it's not. So this goes back to why they cannot tax the billionaires, is because the money doesn't exist. So you're making deals on things that don't exist. So those deals will always be complicated. And the other thing that tends to happen is a lot of times assets look pretty from the outside until you're looking inside. And then you're like, wait a minute, why am I paying $44 billion for this? If it has 10, because if it's more than 5% of what's on the platform, is like, what am I buying for? The value of social media companies are the people, because the data, you see, the reason social media is free is because people are the asset. So the data that people provide to places like Twitter, if you only have less than 10%, like if you have 200 million and then that number dips down to 150, 160, it's still a very promising business, but it's not worth what it looks like on paper to say there's 200 million subscribers. Finally, in the final edition section of the show, where we touch on which technology I recommend for you guys to go out there and get if you're looking for one. A piece of technology that I do believe you don't need but may want is this technology, which is the Apple iWatch. Now, before I got an iWatch, I didn't need it. And I'll be the first one to tell you that I did not need to have an Apple iWatch. I ended up getting one because I wanted to track my health. I wanted to track my fitness. I wanted to track how I breathe. Because once you watch those Apple presentations and they're like, oh, it does this, it checks your ECG, it does this, you're like, okay, I don't know what ECG is, but I feel like I want to get one of those. So that's what I did. And what it's done, it's been a breeze of a technology because the way it's connected to my phone when I receive a text. And I don't want to take out my phone from my pocket. I just look at the text, I see the message. If it's important, then I take out my phone and I respond to it. If it's not important, just keep it moving. It gives you that form of convenience. And the other thing that this watch does is it tracks your breathing patterns. So as you're sleeping, as you wake up, you get to see your breathing. It tells you if you're normally breathing, if there are changes in your breathing habits. It also looks at your heart rate. It gives you how much your heart has been beating per minute at every time, especially when you're sleeping. And you get to monitor yourself and get this information that, you used to have to go to doctors to make appointments. And now you have this information, at the palm of your hands. Make make whatever you will with it. And the other value that I get from the watch is tracking my workouts when I'm working out. I enjoy, like when you use the Nike Run app and it's on your watch and then it's like buzzing when you reach a kilometer and all that progress. And then it also tells you the amount of time that you've been walking. It helps make, it's not a need, but it helps put your wants in front of you. Like, one thing it does, it tells you it's time to be, pause your day and be mindful. It tells you how long you've been sitting. You need to start moving. It gives you these rings that tell you how active you've been during the day. So it's a piece of technology that definitely you don't need to have, but you may want to have, and I recommend it to you. I hope you guys enjoyed today's show. Let me know which other technology companies we should be looking into, other tech news that we should be looking into. We'll be looking into new tech as it comes out. Today, we just wanted to touch on these two headlines that have been in the news, Netflix and Twitter. Next week, we'll look at probably Tesla. We'll look into also just be keeping track on what's happening in the stock market because I feel like it's very interesting what's been going on, man. Like, wow, what a time to be alive. With that said, I hope you guys are having a good time and I'll see you in the next one.